Hello friends, let's start with business and financial market update. After receiving buy ratings from all the top global and domestic brokerage and research firms, Paytm stock price has surpassed the target prices pegged by Morgan Stanley and Yes Securities, while in just inches away from the target set by Bank of America, CLSC and JM Financial Services. In a span of over 4 trading days, Paytm share price has rallied more than 36%, reclaiming the 700 mark. The analyst turned bullish and raised target price on Paytm stock after the company achieved an operating profitability margin, with EBITDA before ESOP cost at Rs 31 crore, significantly ahead of its guided timeline of September 2023. In the last 1 month, 197 communication, that is Paytm script, has surged 30% and nearly 40% so far in 2023. Morgan Stanley and Yes Securities had pledged Rs 695 and Rs 600 respectively as target price for Paytm. The fintech gains revenue from the operations increased 42% year-on-year to 2,062 crore, driven by growth in its core payment business and sustained growth momentum in credit business and commerce business. Paytm, in its business operating performance for January 2023, registered consistent growth in total merchants payments value. The total merchant GMV processed through the platform in January aggregated to 1.2 lakh crore, marking a year-on-year growth of 44%. The company continued to regain the market in offline payments with 6.1 million merchants now paying subscriptions for payment devices, while MTU stood at 89 million, registered a robust growth of 29% year-on-year. Moving on, a rally in the shares of Microsoft Corporation has the software gains market share set to close above $2 trillion for the first time in near 6 months amid a rebound in technology stocks. Microsoft rose as much as 3.4% to $276.76 early Wednesday, joining Apple Incorporation as the only stock with market capitalization above $2 trillion. This is the first time it has exceeded that level since August, after rallying 29% from a November low. Apple has a market value of about $2.44 trillion. Recent gains in the stock has come amid widespread investor interest in all things related to artificial intelligence. Last month, Microsoft announced that it's stepping up its investment in OpenAI, the owner of a widely popular chatbot. At an event on Feb 7, the company unveiled a version of its Bing internet search engine powered by the ChatGPT technology. Moving on, auto major Mahindra & Mahindra is likely to clock up 42.5% year-on-year growth in revenue to 21,712 rupees crore in the October to December quarter 23 brokerage estimate. In the year-ago period, the company reported revenues of 15,238 crore rupees. The tractor-to-tractor SUV maker will announce results on Friday, February 10. According to estimates, softening raw material prices coupled with volume growth are likely to help EBITDA margins expand up to 60 basis points to 12.6% in Q3 financial year 23 from 11.9% in Q3 financial year 22. Adjusted profit after tax, that is PAT, meanwhile is projected to grow up 35% year-on-year to 1,825 crore rupees in Q3 financial year 23, while declining up to 27.1% quarter-on-quarter from 2,337 crore in Q2 financial year 23. On the board says, shares of M&M declined 1.4% in Q3 financial year 23, whereas peers like Maruti Suzuki and Tata Motors slipped up to 4%. In comparison, the S&P BSE Auto Index was down 0.8% and Nifty 50 Index climbed 6% during the same period. Moving on, shares of Trent rallied up to 7% to 1,324.95 rupees on the BSE in Thursday's intraday trade in an otherwise range-bound market after the company reported strong revenue growth in December Q3. In comparison, the S&P BSE Sensex was up 0.05% at 60,691. The company said its consolidated revenues for Q3 financial year 23 at 2,460 crore rupees grew by 53% over Q3 financial year 22 and 185% over Q3 financial year 20. Profit after tax was up 21% year-on-year to 161 crore rupees. Trent is part of the Tata Group and operates a portfolio of retail concepts. The primary customer propositions of Trent include Westside, one of India's leading chain of fashion retail stores, Zudio, a one-stop destination for great fashion at great value, and Trent Hypermarket, which operates in competitive food, grocery and daily needs segment under the Star banner. Meanwhile, gross margins for the quarter declined 590 basis year-on-year to 45.4%, possibly on account of sharp rise in share of Zudio format, which has lower margin compared to West Side. Higher OPEX cost on account of new store openings resulted in EBITDA margins declining by 620 bps year-on-year to 15.5% on a very high base, ICICI Securities said. Moving on, nearly 50% founders of Indian startup expect fundraising to get tougher in 2023 and hiring to be muted as per Innovent Capital's India Startup Outlook report. The report revealed that only 53% of the founders said they had a positive fundraising experience, down from 92% in 2021. Founders revealed that there was higher priority for profitability over growth, it added. Moving on, a blistering rally in the Cobalt market is turning into a rout, putting pressure on miners and offering tentative cost relief for car makers after a surge in battery metal prices last year. Cobalt rallied sharply early in 2022 as demand for the electric vehicles surged. But while automotive usage is still rising, there has been a sharp drop-off in buying from another key sector, Chinese electronics, and Cobalt prices have crashed more than 50% since a peak in May. Pound for pound, the batteries used in laptops, phones, tablets contain much more cobalt than EV batteries. The demand from the industry has fallen about 30% to 40% over the past year, according to researchers Rystad Energy. At the same time, demand growth for use in EVs is moderating as more manufacturers shift to battery chemistries that don't require cobalt. For car makers, cobalt boom to bust swing will have a minor impact on the cost of batteries when compared with other materials like lithium, which is used in much greater volumes and is still trending at sky-high levels. Moving on, PM Narendra Modi, while addressing the Rajya Sabha on Thursday, underlined the need for self-reliance in the defense sector and said, the country is now exporting defense equipment worth nearly 1 lakh crore rupees. He added that over 350 private companies are working in the defense sector. The PM further said the possibilities of green jobs are increasing in the country. Thanks for watching this video. Stay tuned with Financial Pulse for business and financial market updates.